Okay, now let's try looking into this. See, there is my cost line. Now, if I look into it, a cost which is parallel to the x-axis is which cost? Which is the cost? Correct. This is my total fixed cost. Correct. Now, which is this cost? That is gonna increase as the number of units increases. Correct. Can I say total fixed cost and total variable cost put together? This is gonna be my total cost curve. Guys, economics, yes or no? Now I want you guys to understand. I would always sell my product above my variable cost, yes or no? Right? So see here, I will try selling my product always above my variable cost. I want you guys to look at it always above my variable cost. And now I want you guys to observe this carefully. This is my total revenue. The difference between total cost, sorry, total variable cost and total revenue. What is this? This area? Wrong, Nivedita. See here, I'm talking of this area, which I'm highlighting it. What is this? Guys, this is my variable cost. This is my total revenue. The difference between variable cost and revenue is what? Thanks, Amoda. This is my contribution. See this point. This is my total cost, correct? At a point where my revenue matches total cost is what? This is my break even point in units. Did you understand? Did you guys understand here? Should I repeat anything? Guys, are you clear? Now see this portion. Here, my revenue is more than the fixed cost in this portion. And this is my profit. Are you clear? This line or this chart, we call it as break-even chart. Should I repeat anything in the chart or are you guys clear with this? Done? Now, even if I'm, guys, I want you to answer me this question. If I'm producing 0 units, what is my profit? If I'm producing 0 units, what is my profit? I won't have a profit, I have a loss. Why? Because even if I'm producing 0 units, I will have to incur fixed cost. Yes or no? Are you guys clear? Now, the next chart I'll be talking of is known as PV chart. What does PV chart say? PV chart says, now see here, the PV chart says, if I'm producing 0 units, I'll be suffering, this is my line below the origin, I'll be suffering a loss equal to fixed cost. And as I keep producing more, my loss keeps reducing because of dash. Tell me. As I keep producing, my loss keeps reducing because of dash. What is that? Thank you, Amoda. Because as I keep producing more, I know I will be having sales minus variable cost contribution. My contribution will be helping me towards reducing my fixed cost. Yes or no? Thanks, Amoda. Are you guys clear? Suresh, should I repeat anything? So, see here, my loss keeps reducing slowly, and finally it will touch my x-axis. This is going to be my break-even point. Did you understand this? Now, see here, this is my break-even point, correct? Any sale more than my break-even is known as what? Margin of safety. Again, guys, are you all clear? So now let's just try look into it, guys. See here, this is my sales revenue. This line is my total cost. The point where my sales revenue meets my is my break even point and break even sale. Are you all clear? Now see a PV chart. What is this point? Guys, what is this point? I know loss, Suresh. What is, why am I suffering a loss? Fixed cost. I keep going up, hit here, this is my break even point. Are you all clear till now? Any doubt in the concept? Everyone, let's try looking into the question. Illustration number 6. You are given the following data of 2007: variable cost, fixed cost. Find out the break even point. Okay. Now in this case, how do I find the break even point is the question. How do I find the break even point? Can you find out the break even point? In a question which is like this, I would always suggest you guys first find PV ratio, because you don't know whether it is for one unit or for multiple units. First step, find out the PV ratio. What is the formula for PV ratio? Contribution upon sales. What is my contribution? 1 lakh minus 60. Okay, now I'll use the break even point value formula. What is break even point value formula? Fixed cost upon PV ratio. What is fixed cost here? Divided by PV ratio 0.4 is my break even point. Did you all understand this? So whenever they do not specify the number of units, please don't try doing. I have seen a lot of students, what mistake they do in the exam is, see here, they will see this variable cost, fixed cost. They will say, okay, total cost is 90,000. Break even point is a point where it's there no profit, no loss. They'll say break even point is equal to 90,000 only. But you need to understand, when you are incurring a cost of 90,000, you are making a 10,000 profit. So that cannot be a break even point. Are you clear? Should I repeat this again? Should I repeat this, Suresh? Others? Okay. So I found my break even point 75,000. PV ratio of 40%. What is margin of safety? Thank you, Amo. The margin of safety is what? Total sales minus break even sales, that is 1 lakh minus 75, which is 25,000. Now draw a break even chart showing contribution and profit. Break even chart, that means what? I have to draw one variable cost line in the exam. Now my break even point is going to be at 75,000. Anything more than 75,000, this is going to be my profit. Are you clear? Guys, are you clear? Uh, Suresh, here, since I don't know the number of units or the cost, so I would not be able to find a break-even sales here, because you don't know whether the sales is for 1 unit or 100 units or 1000 units. Even in the previous chart, you cannot find break-even sales, Suresh. Guys, see this question. Prepare a profit graph for A, B, and C and find the break-even point from the following data. Now, see here, what I try doing is, see the first one, how much contribution are you going to get from product A? How much contribution will you get from product A? 7,000 minus 1,500. Product B, product C, have a fixed cost of what? 5,000. Till here, are you clear? Now, see here, what I try doing it. They are asking me to make a profit graph. That is, when they say profit graph, we are meaning the PV graph. Now, I know I'll be starting it at what? A loss. Why loss? Because this is my fixed cost. When I produced product A, see here, from 5, I ended up making a 6,000 rupees. So that means I am making my profit in the first unit only. Yes or no? See here, 5 is the fixed cost, 6 is the contribution. I am already making my profit here. Yes or no? Second one, my contribution was 2250. So my total contribution was 8250. So if I reduce my 5,000 of fixed cost, I'm making a profit of 3250. Then this. So when I draw a line, I know that, see here, I start drawing my line in this manner. See here, my cumulative sales, I have made 7,500, 7,500 and 3,750. So I made a cumulative sales of 18,750. So for my first unit, I am making 1,000 profit. Then I am making 3250. Then it is dropping to 2250. Done. Then you connect this line. This becomes my profit line. Now there is a question which people ask, how do I find my break even point? Because in the graph though, I can't understand where do I get my break even point. So what do I do with it is the question. Now what I do with regards to my break even point is, I find the PV ratio. Now how do I find the PV ratio? See for the first one. How much is my first PV ratio? First PV ratio 6000 divided by 7500. Second one 2250 divided by 7500. Third one minus. So how much will it come? First one, second one, what's the second one? Third one, third one, minus 20%. If I try finding the ratio between the sales, can I write the ratio is going to be 2 is to 2 is to 1? Because it's 7500, 7500. Yeah? Guys, are you clear till now? So my cumulative PV ratio is going to be 2 into 2 by 5 into 80% plus 2 by 5 into 30% plus 1 by 5 into minus 20%. So that will be 5. Are you clear till now? Guys, is there anything that you're not understanding? Please let me know. I can repeat the concept. Narmata, I'll have to go back to the graph, so just give me some time. Okay. Guys, yesterday, if you remember, we did this part called finding out a break even when I had multiple units. See, my ratio of sales is basically my ratio of sales, guys. See here, if I have to look into my sales portion, right? My ratio of sales is in the ratio of 75 is to 75 is to 37.5, which is in the ratio of 2 is to 2 is to 1. See, till now, if I had to find a break-even point, I used to do fixed cost upon PV ratio. This applies when I have 1 unit. In this given question, I have 3 units. So I have to find weighted average of 3 PV ratios. Are you clear, Priyanka? Guys, are you all clear? Right? So that will be, once I find the PV ratio, that was here 6000, here 2250, here it was minus 750 divided by the sale 7500. So this was 80%, 30%, and minus 20%. So I am finding weighted PV ratio, that is 2 by 5, that is 2 is to 2 is to 1 will be 2 by 5 into 80%. Are you all clear? Guys, are you all clear? Correct, Priyanka. But here we are doing is the composite PV ratio because I don't know the contribution per unit. Are you clear? So can I find break even sales? Break even sales will be fixed cost upon PV ratio, which is fixed cost is 5000 divided by zero point 0.4. Therefore, it's going to be 12,500. So now guys here, Narmata, you said you missed the chart, right? So I'm explaining it to see here. I will always see here, since it's a PV chart, my loss will be at minus 5000. Why? Because this is my fixed cost. It will keep it will keep increasing and it touches at a point of 12,500. Are you clear? So I'm making a profit of 1000. Then from there it will become 3250. From there it will drop to 2500. So I'll join this line. This becomes my profit line. Now see the graph. My break even point is gone. So first unit I made 1000 profit, then 3250, then it dropped to 2250. When I draw a graph line for all the three profit line, it will touch my x-axis at 12,500 because that's my break even point. Are you clear? Everyone, are you clear? Guys, I've already covered margin of safety. What is margin of safety? I told you projected sales minus my break even sales. And what is margin of safety can also be found out, guys, here. This is another formula you have to remember. Margin of safety is basically any sales what you're doing more than break even. Therefore, profit divided by PV ratio. Now see, a company earned a profit of 30,000. The marginal cost and selling price are 10 and 2. Therefore, what is your contribution? Contribution is 2. PV ratio will be how much? Guys, are you clear? Suresh, the chart is a little different, so don't worry about the chart. You know the line has to touch your graph at the break-even point. Graph is only representation. That's why no, you put one star. Graph is only for representation purpose. Don't worry about it. Get your concept clear. That's enough, sir. You write what is break-even point. You draw 3 points, 1000, 2000, 3250 and 2250. That's more than enough. And write break-even point is 1500. Make sure that line is drawn. Okay, guys. In this question, what is my PV ratio? 2 divided by 10, 20%. I told you margin of safety formula is what? Profit divided by my PV ratio. So that comes to 1,50,000. Is everyone clear? Okay, everyone see here. Let me try understanding this question. What have they given? The company maintains a margin of safety of 37.5% with an overall contribution to sales of 40%. The fixed cost amounts to 5 lakhs. Okay, now let me try understanding few points with it. I know fixed cost, I know PV ratio, I know PV ratio, I know margin of safety percentage. Is there any formula that I can apply first? Is there any formula that I can apply first? I think I can apply the break-even sales formula, that is fixed cost upon PV ratio, correct? So that will be fixed cost is 5 lakh, PV ratio is 0.4, therefore break-even sales will be how much? How much will be break-even sales? 5 lakhs divided by 0.4. Anyone, any doubt in this first one? Now, what is margin of safety as a formula? What is margin of safety as a formula? Margin of safety is equal to total sales minus break even sales. Total sales minus break even sales. Are you clear? Guys, are you clear? So, I know margin of safety percentage is basically margin of safety divided by my total sales. So, let me try understanding. If margin of safety is 37.5%, I know my total sales is 100%. Can I say then break even sales will be 62.5%? See here. Yes or no? Because total sales minus break even sales is margin of safety percentage. So if this is 37.5, I know total sales is always 100%. Therefore, can I say break even sales will be 62.5%? So if 12.5 lakh represents 62.5 percentage, what will be 100 percentage then? Do a cross multiplication. Yes, are you clear? Now, I know my total sales is 20 lakh. My PV ratio is 40%. If PV ratio is 40%, can I say variable cost is 60%? Yes or no? Guys, I've repeated this formula because PV ratio stands for contribution. Therefore, my variable cost will be 60%. So, out of 20 lakh, my variable cost will be 60%, which is 12 lakh. Therefore, contribution will be what? 8 lakh. Contribution minus my fixed cost. What is my fixed cost? 5 lakh. Therefore, I'm making a profit of 3 lakh. Are you clear? Anyone, any doubt? Guys, anyone, any doubt? Now, see here. what are they saying? Calculate the new margin of safety if the sales is increased by 7.5%. Conceptually tell me, if sales increases, will my fixed cost increase? If sales increases, will my variable cost increase if sales increases? Yes. So I'll increase my sales 20 lakh by 7.5%. That is, how much will that be? 21 lakh. Okay. How much was my variable cost? 12 lakh, or I can say 60% is my variable cost. How much is my guys? Sorry, they've asked only for the margin of safety, no? So 21 lakh 50,000 is my total sales. What is my break even sales? I calculated in the first line, break even sales is 12 lakh 50. They're asking me for the new margin of safety. Therefore, new sales minus break even sales, it will be 9 lakh. Did you all understand till here? Guys, are you clear? Okay, guys. Now, let's try understanding this question. We have to tell whether the PV ratio will increase, decrease, or other thing. So, at the back of my mind, let's keep this. What is PV ratio? Yes, what is PV ratio? Correct? Contribution to sales. If the number of units increases, will there be change in the PV ratio? If the number of units increases, will there be a change in the PV ratio? Why? Because it is contribution upon sales. Contribution is dependent on variable cost. So therefore, since both are variable, even if the number of units increases, the PV ratio will remain the same. Does anyone have any doubt? Or should I explain this with numbers? Guys, see here, my selling price is 10, variable cost is 3. What is my contribution? 7. What is my PV ratio? 7 by 10, 70%. If I produce 100 units, will my PV ratio change is the question. Farin, if I produce 100 units, my sales will become 1000, variable cost will become 300, this will become 700, this will again become 700 by 1000. So that's the okay. If there is an increase in fixed cost, will there be a change in the PV ratio? Does fixed cost and PV ratio have any effect? The answer is no, there won't be any change. If there is a decrease in variable cost, if there is a decrease in variable cost, what will happen? If variable cost decreases, if variable cost decreases, my contribution will increase, therefore my PVR will also increase. Decrease in contribution margin. Decrease in contribution margin is basically either your sales would decrease or variable cost would increase. That will lead to decrease in the PV ratio. Increase in the selling price. If you increase selling price, what will happen? Contribution will become more. If contribution becomes more, your PV ratio will increase. Fixed cost, no effect. A lot of times, I want you guys to tell me this. What will happen? Guys, there is an increase of both selling price as well as variable cost. Nivedita says no impact on PV ratio. Does anyone want to support Nivedita? No change in PVR, Amoda. No change since both are increasing together. Narmata. Okay, let me take an example. Selling price is 10, variable cost is 5. What is my PV ratio? Let's make it 140, sorry. What is my PV ratio? It is 60. Selling price increased by 10%. That will be 110. Variable cost increased by 10%. 44. PV ratio 66. 66 divided by 110. So, like you said, there will not be any change. Okay, now see here. Selling price is increasing whereas volume is decreasing. What will happen to the PV ratio? Selling price is increasing whereas volume is decreasing. Correct? Because volume does not have any impact. 50% decrease in variable cost. If decrease in variable cost will increase my contribution. Are you clear? Guys, now I want you guys to see here in the PV chart, right? See, this is my total cost line. This is my revenue. This is my break even point. Anything more than break even is my margin of safety. Once I cross my break even point, this angle which gets formed, this is not the profit because I still would have some part of it. This line after my break even, the angle which gets formed here, this is my profit line. So this angle between the cost line and the profit line after break even is called as angle of incidence. Guys, are you clear? Okay, the next topic what we are doing is just more for understanding what is a relevant cost or a irrelevant cost. See now, before we go into anything of the CVP analysis, we'll be using this majorly in the next topic, but let's try understanding directly to a question. But we need to understand few things in terms of the costs which are relevant and irrelevant. Now I'll be sharing you guys another video which I want you guys to watch it so that your concept becomes easier. But from the CA exams person, let's try understanding few things. Now, whenever we are taking a short-term decision making, okay. Now let's take our example of our Mr. Suresh. Mr. Suresh wants to buy a Audi car. Okay. 3 days back, he bought a Mercedes car. But now he is not happy with Mercedes. Our Suresh wants to buy which car? Audi. He purchased Mercedes car by paying 50 lakh. Okay. Now he wants to buy an Audi which is of 65 lakh. He can only keep one car at a time. Now, how much extra money does he require to buy a Audi car? You guys don't think that's the problem. As if I don't know 50 lakhs and 60 lakhs difference is 15 lakhs that I asked you guys the question. Correct, no, Naveen? Without knowing 65 lakhs minus 50 lakhs is 15 lakhs, I became CA. Guys, when you go and sell this car, even though it is 3 days old, do you think people will pay you 50 lakhs or they'll pay you less than 50 lakhs? Let's say our Naveen went to buy a car, he will pay only 45 lakhs. He'll only be paying how much lakhs? 45 lakhs. If Naveen is paying only 45 lakhs, how much extra money does he have to pay? 16 lakh, yes or no? Now, what you if you have decided to purchase a car of 65 lakh, does this 15 lakh has an impact or 49 lakhs has an impact? You have decided to buy a car of 65 lakh. Which has an impact? 50 lakhs or 49 lakhs? What are you considering for taking your decision? Guys, thanks Pratham. If you have decided to buy a car of 65 lakhs, to decide how much money you want, did you take 50 lakhs into the consideration or did you take 49 lakhs into consideration? 49 lakhs, right? That means whenever we are taking decisions, we do not consider historical cost, we only consider the realizable value. That is the concept. When we are trying to take decisions, what should I consider? The realizable value and not the historical cost. Are you clear? Second part, any cost which is incurred in past, any cost which is incurred in the past is known as sunk cost. Sunk costs are irrelevant for decision making. Any cost incurred in the past is not relevant for what? Decision making. Are you clear? Now let's try looking into third question. Our Suresh wants to buy only MacBook. He wants to buy only MacBook by paying 1 lakh. He has decided no matter what happens, he has to buy a MacBook of 1 lakh. Now, the college said that you have to also buy Windows laptop for the lab purpose. Now, whether college says Windows laptop or other things, will Suresh continue to buy a MacBook? The answer is yes. Why? Because our Suresh is a rich guy. He doesn't bother. He says, I have committed, like our Mahesh Babu. Once he has committed, he will not listen to his own words. So, he has decided once. So, what we say in a decision making purpose, if there is a cost which he has committed, no matter what happens, that cost is going to be considered irrelevant, because whether you take decision or not, you are going to continue to incur the cost. So that has no impact on the decision making. Are you clear? Opportunity cost. Now, opportunity cost. Okay. Now, opportunity cost. Suresh has an option of working in a job of 30,000, and now is getting an option to work in another project where he is getting 40,000. So if he is taking this decision, he is losing out an opportunity. So by taking this decision, he is going to be earning only 10,000 more. So remember this, opportunity cost is always a relevant cost for decision making. Opportunity cost is a relevant cost for decision making. Are you clear? Next one, notional cost. What is notional cost? Notional cost is basically a cost which we are not spending money on, but it is something which is relevant for me. For an example, see, you have money. That money, instead of keeping it in the bank or investing in something, you have kept it for yourself, for maybe employing something. You are working in your own company. You are using your house as a place of office, right? Notional costs are the costs where there is no cash flow, but it is relevant for the decision making. Last one is, whenever the company is shutting down its operation, any cost which is gonna be incurred for suspending its operations is going to be part of my relevant cost. So three costs which are not relevant are historical, sunk, committed. Historical, sunk and committed, and all other costs are relevant for me. Are you clear? Clear? I want you guys to see this question. The company can make one of the three products XYZ in a year. It can exercise its option only at the beginning of each year. Now, relevant information about the products for the next year is as follows. What is the variable cost here? Sorry, contribution 4, 3 and 5. Now see here, if my market demand is 3000, production capacity is 2000, how much will you make money? How much money will you make? Guys, how much money will you make? Guys, I'm only asking of product X. When I say money, I'm talking of the contribution. How much contribution will you make? When you're producing X, how much contribution will you make? When you produce Y, how much contribution will you make? When you produce Z, How much contribution will you make? First one 8,000, second one 6,000, third one 4,500. Now, whether you produce X, Y, or Z, will you still incur the same fixed cost? Done. Whether I produce 1 unit or 10 units or anything, this fixed cost will not change for me no matter what happens. And since it's not gonna change, this is not relevant. Guys, see here, if I produce X, I will make 8,000, I will lose 12,500. Yes or no? Guys, if I make X, I'll earn 8, I will lose 12,500. But practically, which is the one? See, I can only take one decision, yes or no? I can only produce one unit. Which is my next best alternative? If I produce X, which is my next best alternative? Why? So that means for I'll make 8,000, I am going to be losing 6,000 of opportunity cost. If I produce Y, what will happen? I'll make 6. I'll make 6. I'm losing 8. And here, if I make Z, I'll make 4,500. I'll lose 8,000. Correct? Are you clear? That's all is your answer. They just want you to find the opportunity cost for each of them. Let's see the next question. MK Limited manufactures and sells a single product X whose selling price is 40 per unit and the variable cost is 16 per unit. If the fixed costs are 4,80,000 and annual sales are 60% margin of safety, calculate the rate of return on sales assuming the income tax of 40%. Guys, it's pretty simple if you look into it. Yes, for in why will you end up producing 3,000 if there is no one to buy your product? Guys, see here. So in this particular question, I know I don't have to break my head. I know my contribution is selling price minus variable cost. Break even point is 20. They are telling my margin of safety is 60%. So when I apply my formula, I end up getting my actual sales as 50,000 units. Then you just apply your formula. Sales 50,000 into 4, 20 lakh. So I have a contribution minus fixed cost. Whatever profit you make, you are making it, giving a tax. So there's nothing much to explain in this question. Guys, any doubt in this? It's purely straightforward question. We have done it already. Second question. This is something new. So let's try focusing on it. For the next year, it is proposed to add another product line Y, whose selling price would be 50 per unit and variable cost is 40, 10. Therefore, I know I'm going to be making a contribution of 10 per unit. The total fixed cost are 6,60,000. The sales mix is 7:3. Determine what level of sales would break even. So I know I have to find, see, my say fixed cost for the first one is 4 lakh 80. My variable cost is correct. So my total fixed cost will become how much? If I add up both, sorry, they have already given the total fixed cost, sorry. So it's already taken into consideration 666. So I know what I'll do is first I'll find the contribution per unit, which is 24 and 40. I know my sales ratio, so I'll find the combined contribution. Guys, I'm just running through the question because we have already done this question. Since I have two units, I have to find a combined contribution. Combined contribution is basically your weighted average, which comes to it. Then I'll find my break even point, that is dividing total cost by contribution. Then you will just divide it based on the weighted average. Does anyone have any problem? We have already done this question. You want me to explain? Please let me know. I've already done a question where we have two products. We have to find combined contribution. I'll just repeat the steps if you don't remember. First thing, I have to find individual contribution. Then I have to find combined contribution. Then I will divide my fixed cost by combined contribution. Then I'll divide the break-even point based on the ratio number of units. Guys, see this question. X Limited supplies spare parts to an aircraft company. Okay. Now see here. XYZ supplies parts to an aircraft company. The production capacity of the X facilitates production to of any one spare part. The following are the cost and other information for two spare parts A and B. So what are they saying? X Limited supplies spare parts to an aircraft company Y Limited. So the production capacity facilitates production of only one. Now they're saying the raw material usage, then the machine time, then you have machine hours, raw material availability, variable overheads and machine hour overheads. Identify the spare part which will contribute highest contribution. Now just multiply each of it and try finding your variable cost. That is, see here, see guys, see here, let's try understanding it. There is a 4000 machine hours and there is 4500 hours of machine B. Raw material available is this much. Okay, we know all of these terms. Does anyone have any problem understanding the question? Guys, are you clear? Now let's try understanding different parts of it. See, now I want you guys to see different things first. See this machine A, you have 4000 hours. If you are trying to produce only machine part A, how many products can you produce? Can I say 4000 hours divided by 0.6? Guys, I want you to understand what I'm doing. I can only try producing one, so I'll try seeing how many maximum units can I produce. See, both are going to be taking 1.6, 1.6. So material, I know, not a problem. I am only concerned about my labor hours or the machine hours. So if I'm taking zero point 0.6 hours for 4000 hours, see here, I can produce 6666, and part B I can produce 16,000. Machine B I can produce 9,000. This I can produce 8181. Alloy 8185, 8185. Guys, anyone has any doubt how I got all of these numbers? Should I repeat? Please let me know. So what I am doing, each of the resources what I have, I am trying to divide with the resources available to find out what is the number of units I can produce by using each machine hour and the number of units. Does anyone have any doubt? Priyanka, Naveen, Monisha? No? Now see here, guys, machine A, B, raw material. Now, if you understand the logic, I can only produce, guys, please remember, I can only produce, see, I can produce 6666 is the maximum. Why? If I try producing 9,000 units, my A is not available, raw materials is not available. So I can only produce the least. That is part A, I will produce 6666. Part B, I will produce 8125. That is least of all the three. Why? Because if I end up producing 16,000, I don't have raw materials and machine hours B for supporting it. Are you clear? Guys, are you clear? So, see here. Once that is done, until we speak again. Once I do that, what I will do is, I'll find my variable cost. What is the variable cost? See, material 12.5 into 1.6. Machine A 48 rupees, machine B, right? So I find my contribution, which is 1 to 27. Here it is 20. This I multiply with the number of units I'm producing. Are you clear? So I'm finding contribution and multiplying with the number of units. Now if you see, I am getting more contribution by producing what? Product A. Therefore, I will end up producing product A. Does anyone have any problem? Now see the next question. If Y reduces the target price by 10% and offers 60 per hour for unutilized machine hour, calculate the contribution. What are they saying? They are trying to reduce the selling price by 10. That means each of it will be reduced by 10 percentage. That is the first one. And offers 60 per hour of unutilized machine hour. Guys, see here. If I am only producing 6,666 units, don't you think here I'll be left with machine hours? For product machine hour B, don't you think I'll be left with machine hours? Yes. Now, see where are we coming from? The number of units manufactured are 66. Now, that is, I'll be using complete 4000. Now, see, if each unit requires zero point 0.5 hours to produce 6666 units, How many machine hours do you require? Guys, did you understand this? Should I repeat again? Guys, should I repeat this? Okay. Priyanka, see here. I have decided that I'm going to be producing product part A, correct? Now, part A, if I'm producing 6,666 units by utilizing 4,000 hours, here in product B, I can produce 9,000 hours, but you know the maximum I can produce is only 6666 units. Don't you think my machine hours B, I will have something left? Because I can only be producing 666, I'll be, yes. Now, to produce one unit of part A, you require 0.5 hours of machine hour B. To produce part A, you require zero point 0.5 hours of machine B. You are producing how many hours? How many units? You are producing 6666 units. And if each unit takes 0.5 hours, if each unit takes 0.5 hours, how many machine hours will it be used? Is the question. I am producing 6666 units and each unit takes 0.5 hours. So I'll be taking 3333 hours. Now see here, machine hours B, machine hours B has 4,500 hours. Machine hours B has 4,500 hours. That means you are only utilizing the 3333 hours, correct? If you are using only 3 hours, how many extra hours do you have? And each hour you are ready to get 60 rupees to an outsider. That will be 1167 into 60 hours. This is going to be my additional contribution. Are you clear? Priyanka, did you understand now? Everyone, did you understand? Okay. But what is happening? My selling price is reducing by 10%. If my selling price reduces by 10%, that is from 145, it is reducing to 14.5. It is reducing by 14.5. Selling price reduces by 14.5. Can I say my contribution will also reduce by 14.5? Yes. Now, see, your original contribution was 27. You are losing out a contribution of 14.5 into 6666 units. Correct? How much did you lose? 14.5 into 6666. Guys, did you understand this? You are losing 14.5 because of your loss in the selling price. So you're losing 14.5 into 66666. That comes to what? 96,657. Okay. You are gaining, guys, you are gaining 70,000. You are losing out 96.67. So what is your net loss? What is your net loss? 26,637. Yes or no? Guys, does anyone have any problem? No? So I was making a contribution of, see here, 7,179,982. From this, because of the reduction in the selling price, I am losing out 26. So I'll end up getting 153,345. Are you clear? Okay. So I'll just give you a brief about what is this last topic about marginal costing about. And I want you guys to just understand the concept. Most of the time, you don't get a question on it, but as a matter of being a costing student, you need to know what goes into it. See, there are two ways of costing. One is called as absorption costing, another one called as marginal costing. Now, what happens in an absorption costing is typically we are making our cost sheet. Do you remember your cost sheet formula? That is basically direct material, direct labor, direct expenses, prime cost plus production overheads. That is my factory cost. Then I have my administration overheads. Then I have my selling and distribution, blah blah blah. I do it right. Here I do my overheads, if you remember, based on predetermined rates. Yes or no? Yes or no? Right? Now, in a marginal costing, the format is very simple. I take my sales minus variable cost, that is contribution, minus fixed cost, then I get my profit. Here, I'll take sales of both variable cost minus fixed cost. Both are going to be a profit. Are you clear? Are you guys clear with this? So see here, absorption costing. I have my material cost, labor cost, variable overhead. Fixed cost is going to be the same, and I'll end up getting my total cost. Are you all clear? Now, what is going to be the major challenge between both of it? Guys, here, the income statement under absorption costing. Sales, we know we take material consumed, labor cost, cost of production. Then I take the opening stock of finished goods, closing stock of finished goods. Then, do you remember this concept of under absorption, over absorption? Now, I want you guys to understand where is this under absorption, over absorption coming. This is coming before my administration cost. This is extremely important. And I'm telling you reason why it is important. See here guys, when I'm doing my absorption costing, my overheads are taken at predetermined rate. Yes or no? You remember we were calculating OAR? My overheads are calculated at a predetermined rate. Do you guys remember this overheads chapter? Overhead absorption rate, right? Whereas to find the actual profit, I am not bothered about overheads absorbed. I'll be bothered about overheads incurred. So see here, if I have absorbed 10,000 and my actual is 12,000, is this under absorption or over absorption? Again, I'm repeating. I have absorbed 10,000. I've incurred 12,000. Is it under absorption or over absorption? This is under absorption. And under absorption will always reduce my profits. Why? Because my actual expenses are more than what I've recovered. It will always reduce my profit. And over absorption will always increase my profits. Are you clear? Right? And the second part you need to remember this is whether I'm doing marginal costing or absorption costing, selling and distribution. Guys, please remember this. Whether I'm doing marginal costing or absorption costing, what happens is my selling and administration cost will always be treated as sorry will always be treated as period cost. Therefore, there will never be a change whether it is under marginal costing or absorption costing. Are you clear? Okay, so the first difference between absorption costing and marginal costing is my absorption costing takes based on overhead absorption rate, whereas marginal costing takes fixed cost based on actuals. Are you clear? Did you understand this? Because absorption costing takes based on OR, I need to do an under absorption or over absorption adjustment. Did you understand this? Second point is these overheads, that is these fixed overheads are considered only for the production overheads only. Are considered only for the production overheads. Are you clear? Are you all clear? The second part of the difference is when I'm valuing my finished goods under absorption costing, the fixed cost plus variable cost per unit will be included in the fixed cost. So your fixed cost will have both what? Sorry, your finished goods will have what? Both fixed cost and variable cost. Whereas finished goods under marginal costing, we know marginal costing is only the variable costing. Are you clear? Anyone, any doubt? No? Guys, now let's just try looking into this question and try understanding whatever we have learned. Wonder Limited manufactures single product zest They have given selling 400 units, 800 units, sales, variable fixed, variable fixed. The normal level of activity in the year is 800 units. Fixed costs are incurred evenly throughout the year. The fixed costs are same as budgeted. There were no stock of zest at the beginning. Now, why is this required? Is because one, you need to remember when the fixed costs are same as budgeted, what is it gonna happen is my OAR is equal to actuals. So there won't be any under absorption or over absorption. Are you clear? Why? Because the cost what you have incurred and what is spent is both the same. Are you clear? Guys, are you clear? Second one, if there is no opening stock or closing stock, it is good for me. Why? Because there won't be any opening stock or closing stock, and what is that effect we'll see later. Now see the way we are presenting it. Okay, first quarter 220 units are produced, second quarter 160 units were produced. They have given me the activity levels and also my fixed cost and variable cost. Okay, we know how to calculate variable cost. Guys, we know how to calculate variable cost. Sales is variable, these three are variable. So what you will do, you will divide by the number of units to get the per unit cost. Yes or no? Fixed cost, this is my budgeted fixed cost. I'll divide by the budgeted units, which is 800. Are you clear? Guys, are you clear? So see here, my budgeted units is 200 per unit. I am producing 220 units, so it will become 44,000. Okay. My budgeted overheads is, see here, fixed is 160. They are saying the budgets versus actuals are the same. Budgets versus actuals are the same. Now, if budget is 1,60,000 for 1 year, they are talking of quarter. Per quarter, how much is it gonna be then? 40,000? Yes. Now, your fixed overheads is, see here, 200 per unit. Multiply by the number of units, 220, you are getting 44,000 as your overheads recovered. Okay. And your budget and actual being the same, my actual is 40,000. So my overheads recovered is 44. My actuals is 40,000. So have you under recovered or over recovered? Over recovered 4,000. Are you clear? Are you guys clear? Guys, now see here what I want you guys to understand. I know the number of units I've sold is 160. But how many did you produce? You produced 220. Therefore, I am having a closing stock of what? 60 units. Are you clear? This 60 units under absorption costing should have both fixed cost plus variable cost. Yes or no? My fixed cost per unit is 200. My variable cost is 800. Therefore, my total cost is 1000 into 60 is my value of closing stock, which is 60,000. Did you understand this? My closing stock under absorption costing should be under total cost, that is total manufacturing or the production cost, which is my variable and fixed. Done. Then I have to adjust. I told you any over absorption will reduce my profit. So you'll reduce it from the cost of goods sold. Then you'll reduce your selling and distribution, which is going to be always going to be the same. So I'll make a profit. If I go under marginal costing, guys, here, I don't have to worry about it. I can directly do a contribution. That is, see here, sales, variable cost, my closing stock of 60 units will be valued at only the variable cost 800. Don't go with what is done in the book. Is only going to be at 800, just the variable cost, which is 48,000. Done. So I'll end up getting my cost of goods sold. Then you get your contribution by reducing your selling. Then you reduce your fixed cost based on actuals. You will end up getting 28. Now I want you guys to see, why is there a difference in the profit between marginal costing and absorption costing? Why is there a difference in the profits under marginal costing and absorption costing? Anyone can take a guess? Why is there a difference between marginal and absorption costing? Everyone check the value of the closing stock. What is the closing stock under marginal costing is 48,000. Why? Because it has only variable cost. See the closing stock value here, 60,000. What's the difference between both of them? It is 12,000. This 12,000 will be the profit difference between product A and B. Are you clear? Guys, are you clear? That's all with this chapter. Just go through it once. Uh, just practice it, guys, because it's very easy. Just you have to practice it, do it, and I'm sure you will be able to get your 8 marks. Thank you so much. See you